have lots of history of how it is to pay for the client development, how to grow in the tough times and the better times. The second thing is, like, some of you may expect that I'll have much more knowledge about the future funding or grants for other clients, but we actually separated that quite clearly at DEF, so that's with Xiaowei, and she's not here, so maybe you'll be slightly disappointed that I won't give you that much of an oversight of how other clients are working. I usually even don't ask them too much. I just had a conversation with Greg, but usually don't do that. Just not to create that impression that the clients feel a bit awkward, or like we'll be sharing it with Tomasz. So yeah, I'll give you a bit of a story to show that actually building client and funding the client is actually a bit tougher unless you add a few things. So Nethermind was founded in 2017. The ETH price was around $300. It matters because it was source of funding for me at the time. I had around $40,000, I don't remember well, and around 500 ETH at that time. Now it's almost zero directly because of developing a client. So I sold 25% of ETH, and I thought, okay, I'm building a company that will be around Ethereum. And it's like, I found it today that it's in 2020, I was remembering the first days, and yeah, I just sat down in the office. I rented an office at WeWork. I thought that just to keep myself mentally sane, I will rent a nice office for myself at WeWork, and it was with a nice view, and that was my biggest expense for the next 1 or 2 years almost, until I hired the first person. So I was not paying myself any salary from the company, but I had the money from sold ETH to just sustain myself living in London, right? And London wouldn't be the best choice. If I didn't have this money, then probably the solution would be go somewhere to a very cheap living space, and work from there for a year or two. What else here? Okay. And the business plan in 2017, and I think this is an important concept. From the very beginning, I was thinking of it as a company that will build something. Choosing .NET for building the client was not, the client in this language does not exist. It was a bit like this, but I chose .NET because I knew .NET. I thought it will be good enough to learn, and I started building it just to very quickly understand Ethereum and Yellow Paper, and to start building something related to trading. I wanted to build decentralized exchanges. I started thinking that there'll be hedge funds and financial industry financial industry companies that will want to pay in the future for the node. So it's thinking, well, nobody builds enterprise node, nobody builds for enterprises because everyone builds just for cypherpunks. So if I pick .NET, it's a very enterprise language. Also, it will attract people that normally will not go anywhere else to build other clients. So I can do it. And this is where I could ship the fastest because I knew the language very well. And I was thinking at that time, well, Rust will be better, but there is parity in Rust. There was parity in Rust. And I thought I would have to learn it. But I thought, no, I want to ship it as fast as possible. I just want to feel very, very confident in the language that I was building. And it's very different from, very often people pick almost like the new language to build a client, just to learn the language for fun. That might delay you if you think that you're building it, but there are different reasons. So you want to build the company around, or you want to just experiment and learn as a developer. I think that both ways are fine. Maybe they define differently your path for sustainability. And then at that time I was thinking, okay, so in the future maybe there'll be digital assets custody, market making, brokerage, real estate assets, things like that. So I was thinking of this financial market because I was under the impression of a book, Hedge Fund Wizards, that was talking about how in the 60s or 70s people were building systems for trading, and they would trade based on the TV news because everything was so slow, and they were talking about the transition, the changes in the 80s and the 90s into e-trading, and how the market data started flowing in, all the risk management happened with the automated systems, electronic systems, and how it entirely reshaped the industry. And I said, okay, it took them 20 years. Probably in blockchain will take just a few years, but people will start paying for that. So there is a vision of make money. And at the same time, I was trying to to the fundraise for data marketplace. I thought that selling data will be a solution. It was a bit of a failure, but we were building it on the side for 3 years, and I was trying to do the fundraise from VCs, but never managed to. So you see, 2018 October, so almost 1 year after we started, there was the alpha release 0.90, and it was able to sync the entire mainnet, and it didn't have fast sync, and it didn't have some other very important things. I don't remember what was missing at the time exactly, but it was a big moment. Okay, releasing something for the first time on Reddit, I was not even on Twitter, so that was very important for me. I missed all the social media. I was not connected, and it allowed me to focus a lot. Like I was building hours a day, just client trying to pass tests and so on. Now, I consider this probably on one side as a massive set of mistakes. I'm telling you like how to build sustainable clients, but it's like 3 years delay to deliver something. 1 year here, but then to really start making money on it, it was 3 years. So September 2018, we got the grant from Ethereum Foundation, $50,000, made a first hire. 2019, first contact grant from POA, XDAI, supporting Aura in Nethermind. So I was looking for opportunities, how to get grants, build something on the side, building some consulting projects. So I started helping some other projects that wanted to build EVM into their chains, getting jobs where I would almost like drop my work on Nethermind client and just get some consulting work that I would be paid directly, just to survive. And here you see like some numbers. Over 2 years, we spent £40,000. And we were calculating runway like $3,000 per month, and it was a team of 4. I think so monthly expenses like $6,000, and it was a team of 4. And in January 2020, like the ETH was at $80 at some point, and we almost went bankrupt. I had to sell all ETH, right? So remember that 500 ETH at the beginning, it just disappeared in 2020. Funny enough, because everyone was suffering at that time. Like, so all the teams were not spending, the grants were delayed, the payments and invoices were delayed, everything hit you at once. April 2020, raised from 2 fantastic angel investors at 4 million. And then things started going parabolic well, because ETH was going up. People knew that we were building for 2-3 years when nobody else was building, so people started getting in touch, saying build for us. And the one important decision that we made at that time, and I compare it to other companies that kind of stayed in place. Like at the same time in 2020, they were the same size of like a few people building. And I would meet 2-3 years later and they would ask, what did you do differently? And the only thing that we did differently was we assumed that the market was going parabolic and we started hiring like crazy. So we hired like 20-30 people and we said like, now we have to take advantage of it. So for 3-4 years, we were operating like 3-4 months runway. Just always pushing to invest more into the business, getting a lot of risk and keep building and keep pushing. Super stressful. I mean, like generally I don't recommend it to anyone. I still regret that time, so it was so stressful. Well, if you want to build something sustainable, it's so different from this story in the same way, but it can show you that in the end there is because you'll see in the moment that later Nethermind generates something like $20 to $40 million revenue per year from various opportunities, but in the end, not spending too much is important. And if I got the money from either VCs or bigger grants at the very beginning, I would spend it super fast without knowing how to operate a business and how to build something sustainable. But if you have to run for 2-3 years at the very, very low spending levels, then it teaches you a lot, like how to really value the development effort, how you value every dollar, how to really think of building, and also learn simply to build. Now, I was already 15 years development experience person coming from financial services, from Citibank and Rockus. So it's not like I didn't know how to code, right? So I was building with the flow. Like, sure, I was learning a lot of cryptography and blockchain systems and P2P, but apart from that, I was coding very fast. And then 2021, there's this like Ethereum Foundation client incentive program. It was 4,000 ETH for all the clients. Some clients got 50% of it, and that was massive support. And this is like 40 million spending plan for Nethermind for 2024. So you can see how we like just always think of what's the future technology and how to start growing things. So we use Ethereum client as an expertise and legitimacy for building other things, providing consulting to companies, and also for thinking that people that are at Nethermind should always feel this kind of impression of a constant growth and pressure to think that they're always building something innovative and go forward. And we thought that this is the way to keep attracting talent. That if you tell people that you're not just maintaining it forever, but you'll be always thinking of the new things, and always aspiring for brilliancy, for the best potential code base, then it works in attracting talent and in keeping the talent in. And then you can also use your equity for funding. How much time more I have?
3 minutes.
3 minutes more, okay. So now, there are many different models that you see from existing consensus layer clients and execution clients. And then possibly, like if you see this, like Beam clients ideas and other solutions. So people build base clients, will build anything like I imagine the like some solutions for MEV. So you always will start it and will be probably very often the same story before you get revenue. Either you go VC way, and then you might be pressured into token, or very, very likely you will be. And then it's really like, I think in many cases the token solutions are not really synchronizing the alignment, the incentives for founders and when the token becomes liquid and the incentives for everyone else. So it's pretty tough very often. The public goods, so this is funding with funding from grants, obviously, Ethereum Foundation, other foundations. You're building the client and you try to think how you can use this expertise to get other grants, maybe the bits of the clients that you're building, you can sell it to other companies. Maybe they want to build something on top of it. And then you have to be really open for accepting grants. Legitimacy expertise into consulting, which can be security audits, it can be operating infrastructure, like Lido practically allowed all the clients to operate within Lido. So it was practically like a grant, giving 10 client operators the space for being operators on Lido. It's pretty nice revenue annually. And all the other things where people think, okay, those guys, they know what they're doing, so we can take advantage of it and we can hire them as consultants. And the other options would be, I guess, a company that is already established, think like Consensus, thinking that they need to enter into this business to be very visible there. And, well, I'm guessing here a bit. But this would be probably also behavior of Nethermind thinking, like why we would build Beam Chain. Like to always keep being fresh with the latest things and being around the people that continue building some new things. It can be risky in some situations. We tried to build the consensus layer client a few years ago. We started building it, but we were not involved in all the meetings that much because we didn't have enough funding at the time, and we just dropped it and focused on execution client much more. So I guess it might be the same when you think, oh, there's something novel, but then you're spending more money and you try losing the focus, and maybe you choose it wrong. And one thing that was very important for me as well was that even as we were building the consulting systems and thinking of enterprises, there was also realization that in many situations, the model that I was thinking of was very similar to how the Linux distributions companies were operating. When I was comparing the numbers with Canonical, it was very similar. However, Canonical was starting from the founder that had already like few $100 million made from some other solutions and started investing in the company. And then the company nowadays, after 19 years, generates $250 million revenue annually. And the workforce, the product, the ideas of how you monetize it, I think you can learn a lot from the operators of open source projects like this. And Red Hat itself was 34 billion acquisition in 2019. So this was my vision of, well, even if it don't go entirely financial markets, then from infrastructure you can still make money if you think that you're going to make money. And it was the main assumption was never assume that you would just be always taking grants, always try to make it a business, because it will just encourage you to build better code base, because you will start delivering code base that people really care about, that is professional, well supported, well tested, and so on. Okay, thank you so much.
I'll just say. So you mentioned. I actually have a few questions. But first one first. You mentioned receiving money from the VC. I wonder what's like their expectations on your return and whether that affects your control of the direction of the company.
Yeah, I mean, so we never got money from VC except for these two angel investors.
Yeah, sorry.
So angel investors, I think they're much more laid back, very supportive, and they didn't want any control. They would just ask questions every now and then. Well, one of them ended up joining us as a CEO later, Pradeep, and then actually nowadays he's running Gateway. So it's one of the other infrastructure companies. So he's CEO there, I think. So they're super supportive. They were learning with us. There was the other one was George Hallam, who was one of the early Ethereum builders, one of the Ethereum Foundation people in 2014-15. And so they were amazing. They didn't ask for any control. They just were there. With VCs, I think it would be totally different. I think it might have been a disaster if we managed to fundraise, because I would try to build this data marketplace, which would be a project that I was probably much less prepared to build. And then no VC wanted to support a company that has this portfolio of ideas and thought, oh, this is so hard, it's so risky because you don't build a single product that you can just accelerate. So this wouldn't be a standard investment from VCs, it would be hard. So I'm afraid I'm taking too much time, right? So no.
What are the main insights you are going to bring to EF from your Nethermind experience? From the
What are my main insights after, from the Nethermind time going to the EF?
Yes.
Well, interesting. On one side, I think that sure, building a client is very, very difficult, but also now I don't want to be biased towards just one model of building a client, right? Of thinking, oh, this is how we built Nethermind, so just put a pressure or expect that other clients would build it this way. It might be very, very wrong, because look at Ref solution now, they fundraised tens of millions of dollars to build products from there. It seems like they're building fantastic products, and it's totally different model from how Nethermind was operating. So there's lots of insight that sure you can have some builders that are so really hard to be recognized that they may achieve something. And I think many VCs will say the same. How do you recognize that the builder's willingness to sacrifice themselves for a very long period? I think it's pretty random whether the foundation manages to really locate those people and allocate there. You would have to go very, very wide, very broad, or do a lot of successful scouting. So this is also a risk now. The question is, does it only happen in the time of crypto winter, or it happens also in the good markets? I think you can find more of those builders in the crypto winter times, because it's this big filter of who wants to sacrifice this, says continue building when there's no business. And we kind of have a very different market nowadays. So it's really hard to take any insights apart from, sure, I understand the entire mechanism of where the funding is, what you can build, what different companies are there. So lots of insights, but don't want to just over-index for how Nethermind operates.
Can you mentor us at Z?
Mentor you at Z, I'm sure you can reach out anytime on the Telegram or in person. We can have a coffee and tell me how you approach it. It might be that I will learn from you more than hear from me, but sure.
One more question. Okay. Yeah, a bit more on funding sources and finding alternative funding sources. From your experience building Nethermind, and also maybe your outlook after being exposed to more of the EF. Where do you see the potential revenue coming from for clients? Let's say whether there's more demand from more Web3 Ethereum native companies, or do you think there's going to be more demand from let's say Web2 or institutional clients? And any suggestions on where it should be focused?
I think it'll be both. I mean, now it should be a bit of golden times, golden era of those who are integrating institutions to chain. So stable coins, it's not banking solutions, any real world assets. So things like what Etherealize is doing, what many of the O2s are doing. So I think this is where much will be happening, and by bringing those systems to blockchain and doing them our way, we'll make sure that maybe that like melting of dissipation happens, where the institutions join the blockchain and get like melted into the network. That's what you modularize them, and slowly they start disappearing because everything is so easily replaceable. That's how the permissionless network should work. It should really decentralize every component of traditional system. If we do it wrong, then maybe we'll have this like very strange collection of independent chains that are very centralized internally and are not very interoperable. So I would encourage everyone to participate in this traditional work. Greg?
Yeah, I can probably provide some insights because we had a very similar track with Nethermind and Chainscape. Then went more venture, and there's big trade-offs, and I think that's something that like as client teams we should be aware of. The minute you do go down venture, you have to start making very stark decisions. It depends on who you raise from. Sorry, yeah, just do that too.
Sorry, yeah, Greg from Chainsafe. Burnt out phase 0 developer. Yeah, so we had a very similar track to Nethermind from the perspective of like, you know, we did a lot of consulting initially, then client developing, so I guess a little backwards there. And we did end up raising venture. But the one thing when you get to that point is you have to like be very aware of like the trade-offs, right? And be willing to like go down that. Venture wants return, like Tomasz said, and the big thing you have to think about is like the scale and how you scale like the org internally, because you're going to have to make trade-offs in terms of like where do you allocate money, how are you protecting the client team moving forward, and fundamentally, you know, you're going to probably have to produce a product of some sort that is returnable unless you get, you know, a very interesting deal. And so if you do plan to go down that road, you have to remember that if you don't size up the team correctly and you don't plan and are constantly, you know, projecting where you're going, you can very quickly end up in situations that the client actually starts to lag, right? Because you're pulling resources away from it. So you have to think very carefully, like, especially if you're driving the client, right, as the core developer or the core team, it's like, where is your time going to get spent? Because it'll dramatically push and pull. And that is what eventually happened to myself as well, right? And so happy to also talk to anybody as well if you have questions, but I think it's a very big, you know, push and pull that you have to be cognizant of before getting into it.
Thank you, Greg. Next up, we have a panel discussion, and then we'll break for lunch. So on the panel, we have